What is going on, investors? Welcome back to the channel. I know a ton of you guys were asking me all of last week, are you done making videos on AMC? When are you going to make an AMC update video? Guys, I am back today with another update on AMC Entertainment. I've been gone for a whole week and I had a ton of other information that I really wanted to share with you guys, like some of the best penny stocks that I've been adding to my portfolio, like some of the best dividend stocks that I have been adding to my dividend portfolio. So I thought last week was the best time to share all of that information with you. Now we are going to be mixing some of those videos in this week and throughout the future as well, but I'm also going to keep you guys more up to date on AMC Entertainment, and we do have a pretty big update today as AMC tends to be holding over that $40 mark. So we're going to be talking about three main things in today's video. One is the short interest update with AMC and where it sits. Two is the new rule that is getting implemented that is in favor for AMC Entertainment and the entire stock market in general. Stay tuned for that. And lastly, should we be buying in at this $40 price point? Should we be holding? Where does the potential for AMC ultimately lie? So guys, we're going to get into all of that in today's video. If you are ready for that, stay tuned, subscribe to the channel, turn on those notifications so you never miss an important update on AMC or any of these other stocks, and let's get right into it. So jumping into the computer here, we can see the AMC short interest update. So AMC is sitting at about 14.73% of the free float, which obviously, guys, we know is pretty much not even close to the actual number. We know Ortex reports something like 70% of the data. So what's going on with this other 30%? And I can almost guarantee the 70% that they actually record is still 100% wrong. Nevertheless, why I like to go over this is for one main reason. If we can see this so-called reported short interest going up, then we know the overall short interest is definitely going up. We've estimated this short interest to be 40 to 100% to just absolutely massive numbers that we know they're not reporting, which is fine. Like I said, I just like to go over this data because we know if the reporting short interest is going up, then we know the overall short interest is really going up. And obviously the short interest needs to be going up for us to have a massive short squeeze. So guys, the next thing I want to do here is take a look at the technical analysis, take a look at the charts. So as we can see, AMC is holding above $40 per share, which is pretty big considering we were down in the low 30s going into last week. Now we are back up over $40 per share. And as we can see, we're starting to form maybe another triangle here. Not confirmed yet. We need some more candles to see if this will actually play out. But as we can see, we could be performing another horizontal triangle here, which really can go either way. And I know you guys are like, well, no, duh, it's going to go either way. It's either going to go up or down, of course. But what we need to look for is a break and then a confirmation. Once it breaks out in either direction, it should shoot off in that direction. Just like we can see back here with this triangle. Remember our giant bull flag formed here? Look, as soon as we broke, we didn't just break and then just sputter along and just continue normally. As soon as we broke, it went down. We went down from what? $50 per share all the way candled down to about $37 per share, and this is just in the matter of 10-15 to an hour, not very long whatsoever. So guys, that is what I mean. We need to look for a break either direction, and then we have confirmation, should have confirmation that it will break out in that specific direction. So that's what I look for in these symmetrical triangles. Moving on though, let's get to the main part of today's video, which is exactly what I want to show you, which I think you guys will find a ton of value out of. So this is a new rule that could be implemented coming up here. It says NSCC 2021 and this is 010. So take a listen to this right here. Shout out to this person who wrote this Twitter thread and also to this person who originally started it. Always like to give my shout outs. Obviously this is not my information, but as we can see here, it says this is a 369 legal page document. Obviously we will not be going over the whole thing, but it basically says the NSCC wants to protect the market from a crash in the event of fire sales resulting from hedge fund forced buybacks from shorts. It says here they may know the MOAS is coming. So basically, obviously, as you guys probably already know, is if all these hedge funds would get liquidated, if they would have to sell shares of all of their different stocks just to buy back those AMC shares, obviously that is going to cause a pretty big market crash. And that is what we want to avoid. Although we want AMC to squeeze, we do not want all of our other stocks to go down the drain, and neither do hedge funds, neither does the NSCC, the SEC. Nobody wants that to happen either. So you can take a look. They're trying to protect something here. It says the NSCC wants to protect the market from this crash. from fire sales resulting from hedge funds forced buybacks or liquidation from short. So this article pretty much says that they know the MOAS is coming. Obviously, we don't know if that is true or not, but it says the NSCC is looking to add a new membership group and allow what's called SFTs, or securities financing transactions. These would essentially allow more liquidity, loans collateralized against securities, for groups that get in bad shape, i.e. forced to buy back those shares. It says we know when hedge funds are owning so many shares back to us that typically in a MOAS margin call, they would have to liquidate their long positions, potentially causing a fire sale. Selling off mass shares could crash some stocks. Say they had a ton of Apple shares. If they had to sell billions of dollars worth of Apple just to cover the AMC shares, obviously Apple would go on a fire sale. The price would immediately just drop. Then we would have all those FOMO sellers just selling all of their shares, and obviously that would cause a market crash. So what can we do to prevent this? Well, we can't do much, but these large organizations can, and they are. It says to prevent this, an in-trouble hedge fund could lend or long or short-term their long positions to the SLT members in exchange for cash, only cash, allowing them to access capital to buy back those shares, which in this example would obviously be AMC shorts without all the long positions being shorted for a loss. And so here are some examples here to pretty much make this a lot easier to understand. So it says example 1, this is pre-SFTs or before this rule. It says AMC MOAS happens. It says hedge funds need to cover. Hedge funds sell billions worth of long positions in Tesla, Microsoft, Amazon. Then it says Tesla, Microsoft, Amazon, and all the others, they begin to crash, as does the S&P 500 and many indexes. The market gets scared and people all start to sell. The apes will win. The squeeze will ultimately happen, no matter if they can cover or not. Obviously would go to the DTC and they would have to cover all of those shares and pay us, but the market would lose, and obviously a lot of us would lose, as well as all of our other stocks would begin to crash, which definitely just isn't a good thing. Example 2 here is a lot better, and that is with SFTs. So it says AMC MOAS happens. Hedge funds go to SLTs and park their long shares in trade for cash, and then they will owe interest. Market shares are not sold and the market stays stable. Apes win, market wins. Bad hedge funds will lose billions of dollars, but they will not go bankrupt. To me, this is a win-win. I absolutely 100% agree. And this is a rule that could not only benefit us retail traders, but it could also benefit hedge funds, which obviously is the best of both worlds. Although we don't like the hedge funds whatsoever, we are against them in this battle. But if a rule gets implemented that is entirely against hedge funds, obviously they're going to fight it to their death. But in this situation, it is pretty much good for everyone. Therefore, if this actually happens, it could be really, really good. It also just shows us that these market makers are pretty much preparing for the MOAS to happen. They've tried it so much, they've seen that we are not going to back down. Now they're trying to implement these rules to make it less of an impact on the entire market. Obviously, still, that is all speculation. Nobody knows what's going to happen here. I definitely do not. All I can do is show you guys the facts. But obviously, the facts are looking good. So guys, let me know down in the comments, what do you think about this? Do you think this will make a big impact? And do you think it is a good idea? Do you think it is good for us retail investors? Let me know your thoughts down in the comments below. Let's wrap this video up here with this from Trey's Trades. It says, last sentence here, don't overcomplicate things. This squeeze is simple, and it 100% is. A short squeeze is very, very simple. I know it may be hard to understand initially, but once you understand it, the mechanics of it is very, very simple. We really need two things to happen. One, the hedge funds to keep shorting like they are doing. Two, for the hedge funds not to cover just yet, and also for AMC investors to hold on to their shares. That will force the squeeze to happen eventually. Remember, it cost us $0 to hold, but guess what? It cost them interest payments every single day to hold on to those short positions. And now, last question here. Should we be buying at $40 per share? Well, guys, if you think this squeeze is going to happen, if you think this squeeze can reach $100, $500, 100K, 500K, whatever it may be, if you think it is going to go up to those high numbers, if you have the confidence that it will go up to those high numbers, and you know it will, then yes, why wouldn't you be buying at $40 per share? I think it's pretty simple. If you do not, if you think the squeeze is over, if you do not think AMC has a chance to reach any of those numbers, then no, you should not be buying AMC at $40 per share. Obviously, it depends entirely on your own conviction, and I cannot tell you what to do. With that said though, guys, that is pretty much all I have for today's video. Hopefully you learned something. Hopefully you understand now what this 010 is and how it could really affect us apes very, very positively. Guys, thank thank you so much for watching. You obviously know I will continue to hold all of my AMC shares. Let me know what you're doing with yours down in the comments below. I appreciate all of you. Subscribe to the channel, like the video, and as always, I will see you in the next video.